What's going on? What's going on? Thanks for tuning in. This is Stock Talk Late Night, episode 3, Thursday night. Give it a few minutes here before we jump on in. Ain't gonna hold you long tonight. Let me screw up a little bit. As you come in, do me a favor, just hit that like button. I really appreciate it. If you're not subscribed, definitely subscribe to the channel. We'll get started shortly. Got a couple of topics on the agenda tonight. Gonna do a little quick market recap. Talk a little bit about the best way to pay off your debt, and also today was the Apple dividend day. And then I want to hear you guys stocks or ETF watch list that you may have, and then we'll check in on the Robinhood portfolio to see how we done today. And that the Robinhood portfolio is it's my portfolio that I do show live here. It's the only portfolio that I actually show live. Most of my investing is done through Fidelity, but I have some other accounts. But I don't mind showing that Robinhood portfolio. So we'll take a look at that closer to the end of the show. So just a few more seconds here, and we'll jump right in. And this Stock Talk Late Night is just a series that I wanted to start, just to come in and talk a little bit about stocks and just have a discussion, man. This is an open discussion, open platform. Come in and talk, and we can all learn from each other. I'm not a financial advisor. I'm not an expert, none of that. But I do love to invest. I do love stocks. I do love talking about stocks. So that's the purpose, really, of this channel. So what's going on, Neo? Appreciate you joining. Appreciate you checking in tonight. Let's get started, man. Let's get started. I ain't gonna hold you guys. Don't want to be on here too long. Like I said, we have an agenda here. We're just gonna do a little quick market recap. I want to get you guys insight on the best way to pay off debt. And today was also Apple dividend day, and I want to hear from you guys what's on your stocks ETF watch list. And then, like I said, we'll end it with the Robinhood portfolio and see how we've done over the last couple of days. So let's jump right in. So we had the Dow was up 342 today, sitting at 44,711. S&P up 63 today, up over the 6,100 mark. Yeah, nice day, good day for the S&P. And the NASDAQ up 295, knocking on that 20K door again. So we should be there. We should be there pretty soon. I'm thinking, but we'll see. We'll see. Mm-hmm. Yep. So what were some of your top performers today? Let me know. I saw Apple had another great day today. I actually put in they had a good day yesterday as well. And I got in on a cover call yesterday with Apple. and not knowing it was going to keep pushing through the day. So, man, it kind of hit me today, but that's okay. That's why you have the cover call out. I had it out for a couple, a week or two, so I'll be fine. But yeah, man, Apple's been rolling. Like I said earlier, Apple today is Apple dividend day today, so we'll touch on that as well in a few minutes. So big day for Apple, real big day for Apple. So what else? What else did well today? What did Microsoft do today? Microsoft up slightly, not too much. Still sitting at 410. Amazon up slightly today, not too much. And what else? Google. I don't know, man. Are you guys buying Google right now? Is this a good price to buy Google? Google's sitting at 187 right now. Do you think it's going to get back over 200 soon? I think so. I think so. Neo BRKB. I have some Berkshire B. Great. I think that's a great position. I'm gonna pull up my Fidelity off to the side here, and let me just take a look at my BRKB position. And how much do I have? I'm up overall 34% on my BRKB. I have 6 shares of BRKB. My cost basis is $356.97. And we see BRKB had a big day today. It's currently trading at 480.49. So, man, sooner or later, it's gonna be touching on that 500 mark. But yeah, man, BRKB, I do have some, and it's doing really well. Like I said, I have 6.12 shares, and it's doing pretty well for me. Let me see what else had a good day in my particular portfolio. SMH was up $3 today. SPY was up. I do own some SPY. What else had a good day? VUG. Anybody own some VUG? I have VUG up $5 today. QQQ up $7 today. So the portfolio looked pretty good. Tesla up 19 today. So what are some of you guys' positions that did pretty well today? Ooh, 100-share BRKB challenge, man. That's tough, man. That's tough. Like I'm sitting at 6 shares, and I put a lot of my energy in getting to 100 shares of Apple, which we'll talk about. And yeah, man, yeah, BRKB is big time. It's big time. The Berkshire A, that price is through the roof right now, but a lot of people may not know about BRKB. That's a sleeper. That's a good way to get in on that Berkshire. And that's what I was thinking when I got in on it probably about a year or so ago. And just slowly built up my position. And let me see. What's the one stock position that since the day you bought has just kept climbing? Amazon, for sure. Amazon. And I'm going to go back to my Fidelity. And I'm going to just give you an insight on my buy-in on Amazon and Google. Let me go back here. So when I bought Amazon, so my cost basis on Amazon and Google, my cost basis on Amazon right now is $27.35. And Amazon's trading at $230.37. My cost basis on Google is $28.69. And Google's trading at 187.88. So those are the top two positions. I'm up 742% On Amazon, I'm up 554% on Google. So those are like my two best positions of all time. Um, so yeah, those are the untouchable positions, and those are the ones that's been climbing for me since day one. And so I bought those back in 2016. So the price has been adjusted, because of the stock split. They were trading at $500 a share, both of them at the time in 2016. So you know how you change jobs, and instead of rolling over your 401k into the new job, I took that 401k and I bought Amazon, Google, Apple, and Facebook at the time. And yeah, I've been holding it ever since then. Of course, they've had stock splits, and so the price has been adjusted. But they were like $500 a share, and Amazon got up to like 3,000. I think Google was like close to 3,000. They may have touched 3,000 at one point, before the stock split. So yeah, so that was adjusted after the split. So man, those are my two biggest movers. And if I had held on to my Facebook stock, Meta, that it would have been up there too. Probably not that high, but it would have definitely been there. Maybe so actually with Meta, the way Meta's rolling right now. So, but yeah, I sold out of my Meta to kind of diversify, but I still have a little Meta. My son has some Meta, so that's one of his best positions is his Meta position. So, but yeah, man. Let's see. Um, I've done both. This is the question. Let me ask you: do you think trickling into a position is best over buying in one lump sum? I think it depends. I think it depends. I've done well with both, and it kind of depends on your financial situation, because I love dollar cost averaging. That's kind of my thing. Um, but if I have if it's a sure thing, I don't see anything wrong with putting a large sum of money. Like the Apple and the Amazon, the Google were no brainers to me at that time. In 2016. So yeah, you know, or if you might want to do a VOO or the S&P or something like that, something that you think is going to be a long hold. Um, you know, yeah, fear missing. Yeah, man. So yeah, I've done that. I've done that as well. That happens. It's bitten me. It's bitten me real bad, especially with trading options. That fear of missing out. It got me in trouble a lot actually. So yeah, man, I make those random decisions sometime, and I had to learn the hard way. One time I had like over 70, 80 positions, probably close to 90 positions. I just had to start trimming it down. But I always thought that, man, if I don't get it now, and I'll never get it, then sooner or later you have a portfolio that's just all over the place. And it's not good. It's kind of hard to manage now. So my portfolios now, I usually try to keep between 5 to 8 positions in each portfolio. That way I kind of, I know what's going on now. So, and that's broken down between the S&P. Got to have some S&P, got to have a little growth or tech, and then income. So between that, I break that off into like probably 6, 7, at the most, probably 8 positions, and go from there. So yeah, but my regular brokerage accounts now, I've added a little bit more income because I do want to build up my dividend positions. But try to keep your portfolios nice and slim, right? Pack a lot of punch, but not over the top, my opinion. So yep, good question though, man. I mean, great. That FOMO is man, it's crazy. It's crazy. All right, let's see. Let's go on to our next topic here. So we talk about investing. We want to put as much investing into, as much energy into investing, right? One of our holdups, of course, is that debt, man. Is that debt, whether it's credit card debt or medical or whatever the case may be. So my question to you guys is, how do you pay off your debt? Right? So how do you pay off your debt? Do you look at the highest interest rate? I mean, or do you attack it by attacking the highest interest rate? Do you go with the highest balance? Do you start with the lowest interest rate? And do you start with the lowest balance? So what's the best way, in your opinion, to pay off your debt? Or we can talk about credit card debt. What's the best way that you would attack that? So snowball versus hammer. Yeah. So it's a mind thing, man. It's a mind thing for some people. So I get different opinions from everybody that I ask. And for me, I had a mountain of credit card debt, and I wanted to pay off my car and this, that, and the third. But for me, I took the Dave Ramsey approach, man. I don't agree with everything Dave Ramsey said, but I think he was back a few years ago, and it's a mindset thing, man. I started with the lowest balance, and I just really put everything into that lowest balance to get it out the way, and was just paying minimum on everything else. And bam, once they got out the way, I put that money to the next debt, and then threw that out the way. And then like Lisa say, no car payment. Once I paid off my car, that just snowballed everything. So I think I paid off my car like 2 or 3 years ago, and it's crazy, what that extra money does. So I've been doing everything I can now to hold on to my car, but I know it's coming up, dude. I bought my car, and I'm not afraid to say it. I bought my car back in new, actually, in 2014, and I think I paid it off maybe 2020, 2021, something like that. And having that car payment out the way, man, it just frees up so much money. So I know you like to ride clean and look good and all that other type of stuff, but I'd rather take that no car payment any day. All right, let's see. Try the avalanche last 2 or 3 years. It works. It's slow. Yep. Some people like just attacking that highest interest rate. They want to get that out the way, but I just like seeing stuff just with zero balances. So, if I have something that's $150 or 200 or 300, that's the lower balance, I'm getting that out the way. Then I'm attacking the one with 500, 600, and I'm gonna try to get that out the way, and then just keep moving on from there. So it definitely works, but your discipline has to be like next level, in my opinion. And you have to have, like Neil said, good spending habits, man, to do that. So you gotta sacrifice a lot of things when you're paying off your debt, if you're serious about paying it off. So for me, I attack the lowest balance first and just go from there. And you just gotta grind it out. Gotta grind it out. So yeah, yep. So let's see. Lisa said no car payment. I only have mortgage debt, but I would go with the highest interest rate. Okay, I'm with you. Man, I haven't quite made it to just no only mortgage debt, man. And I know Lisa has rental properties and things like that, which is great. But yeah, I have to do better. I do pretty well, but sometimes those credit cards, they get up there. A little bit. So I got to do better on that. Next topic here. Apple dividend. I know we have some Apple shareholders out there. And today, I have Apple in my Fidelity. So today was Apple payday. So we received our dividends in Apple, and Apple paid 25 cents a share for this dividend. And so the total dividend payment we received this month for Apple is $29.47. This is a combination between me and my son's account. So the total shares currently that I have of Apple after the reinvestment is 118.004 shares. So I have a little bit over 100 in my account, and my son has about 17, a little bit over 17 shares. So we're sitting at 118 total shares of Apple. So yeah, that dividend today was 29.47. Most of that was for myself, but my son also received some dividends, and that that gets reinvested. So pretty good day for Apple. That might have been one of our highest total payments we received from Apple. So I gotta go back and check. I'll update my dividend sheet later on. So, but yeah, nice day from Apple, and Apple pays quarterly, 25 cent. I think that's a pretty good amount for, especially for a stock like Apple. So you can't really beat that for a stock that's always shown that it's been going up over time, and to pay 25 cents a share. It sucks that the price is high, but you know it takes a minute. What brokerage do you have your Apple shares in, Lisa? Because some of mine don't. They pay differently as well. But I have mine in Fidelity, so I saw it in my Fidelity account today. But these brokerages, man, I think my Charles Schwab doesn't pay as quickly as the Fidelity. I like Robinhood because it kind of lets you know in advance what that pending dividend is going to be. So, Webull, okay, Webull, got you. So you probably, I don't know, I'm not familiar with the Webull payment, how if it runs a day or so behind, but you'll probably see it in the next day or so. Mm-hmm. All right, let's see what else we got on the agenda here. So I left this one kind of blank, right? So I leave this up to the audience as far as our stock ETF watch list. Do you guys have any stocks or any ETFs that we should add to the watch list? Let's see. Half a million is out of Singapore. Let's pull this up. Okay, this we're talking. We have a stock called Hafnia. It's out of Singapore. They run tankers across the ocean. It's a monster dividend payer. What's is that the symbol Hafnia? Let me see. Slide over here. Is it HFN? Okay, yeah, HFN. Okay, got you. Let me see here. Let me see if I can change something here. Bear with me 1 second. All right, let's go here on 100 shares to see it. Oh, it's had to pay me 150 this year. Oh, that's okay. That's what's up. Let me see here. See what type of dividend we're looking at. 0.41. That's not bad, especially for that price. And of course, so is this a yearly payment? You get it twice. Get this payment twice a year. I see most dividends are usually quarterly or monthly, but it looks like you get this twice, 2 payments a year. Yeah, under $6 a share. Yeah, man. Okay. Okay, you get it each quarter. I got you. So you got in at a good price though, $5.35. It's down a little bit right now. You see, at one point it was, if you just scroll through the price, and it looked like it was up at $7, but it's done got as low as $4. Yeah, 730, 7. So still, I think that's a good price that you got in. That it was even at $8 at one point. So better to get in now than at the high, which that seems like the problem I run into when I find a good dividend. stock, especially at at a low price. I still get in too high, and it still eat me up with the share price. Okay, but that's good though. That's nice because I'm always looking to increase my dividend payouts. It's just a certain way I got to set it up in my account. So if I do take a hit on the share price, it doesn't hurt my account too much. So that's okay, twice a year. Yeah, that's what it looks like, twice a year. Yeah, yeah, yeah. AIQ, how much is expense ratio? Let's take a look. Let's take a look and see if we can see it on here. I think I had AIQ at one point, but I don't have it right now. Global artificial intelligence technology. Expense ratio 0.68%. Is that too high for you, Lisa, the expense ratio? 0.68%? Yep, 0.68. So is that I know you a stickler for the expense ratio. Is that too high or is that okay for you to add to the portfolio? Too high, okay. Too high. I got you. I got you. I got you. Don't come in with no high expense ratios for Lisa. She's not going for it. But let's take a look and see just how the price has been moving. Last 5 days up 2%. Over the last month up 10%. 6 months 23%. And okay, year to date, 8%, but over the last year up 28%. Over the last 5 years up 112%. So Lisa, when you see a position that's done well with the share price, does the expense ratio still turn you off from buying a successful ETF or stock that's been performing well, or ETF, I should say? So I need to take a look at the performance. Do you think it's worth it? If I was thinking about getting it and I'm seeing how it's performing, I mean, yeah, I mean it looks good to me. You probably want to take a little bit deeper dive, right? We're just looking at the price right now. But if I think that if it's shown to be a good performer, you know, for sure, I would imagine, I need some more AI in my portfolio. So actually, I'm gonna write that down. So I think I had AIQ for a while, and I just let it go. Probably was just trying to trim down some of my portfolio. So that's probably why I just probably was part of the cut process. But um, I can always find a lane for a good ETF for sure, for sure. And artificial intelligence, you know, those are things we have to be invested in. I'm sorry. We have to be invested in AI for the future. I think that's kind of a no-brainer. Um, and let's see here. She got any came across the new filing, manager's position. Okay. They bought at $7.99. If they bought at $7.99 and you got in at five something, you're probably doing a little bit better. So yeah, AIQ looks like a runner over the last 5 years for sure. So it's pretty decent. Yeah. Yep. Yep. I think it's something nice, nice and solid to add to a portfolio. And if you already have a strong portfolio, in my opinion, it wouldn't hurt to add AIQ. Yeah. Wouldn't hurt at all. So I wonder what the loss would be on that, right? If you bought in at $7.99, it's trading at 5, and you put in 173 million. Wow, that's crazy. Yep, yep, yep. But yeah, I've been hit with I like a good paying dividend, but I think it's all about getting in at the right price. And sometimes we talked about it earlier, the FOMO, fear of missing out. I see a good dividend, I want to jump right in instead of kind of giving it time to kind of watch it and see how it moves. And sometimes I get burnt on those, those high dividend payers. Um, Jep Q is one of my favorites though. And let's just take a look while we got up here. Jep Q, just looking at some of the payouts here. Jump into Jep Q. See, it's currently trading at what, 58.11. Let's go to historical data. Jep Q is a monthly paying dividend. And we'll go back to the performance in a minute. You see the last payment. It usually pays at the beginning of the month, usually like the first week of the month. We had a 0.45 payment. We had a 0.46 dividend payment, so 46 cents, 51 cents, 49 cents. Now this is every month, right? Every single month. Every single month. Here we have 55 cents. So you see it's been solid. 56 cents, 43 cents, 42 cents. So if you go back and just look at the let me see, let's go back here. And, over the last 5 days, okay, 0.9% up. Over the last month, we up 3%, 3.8%. Over the last 6 months, JetQ is up 10%, almost 11%. Even year to date, 1.54%, but over the last year, up 10%. Last 5 years, hadn't been around that long, 15.99%. And you see it just came, does it have there you go, exception date. So it's only been around since May of 2022. So not even 3 years yet. But you see it's been performing solid. It pays a nice monthly dividend. Like we talked about large sums of money. If I had a large sum of money to invest in JetQ, I would do that. I would do that based off how it's performed so far. So, yep. So, yeah, man, just trying to always add something to the watch list just for us to take a look at and, kind of keep on the radar. So let me see here. Let's see if I can go back. There we go. Go back here. So yeah, I think that's all for what we had on the agenda. We talked about the Apple, how we pay off debt, market recap. Let's take a little look at the Robinhood portfolio just to see where we stand. Probably not too much of a difference since we looked at it Tuesday, but this one I want to just keep updated, every show, in the show, just looking at a live account here. So let's take a look. All right, here we go. And you see the account is at 72.45, and it's it's live because we have crypto in this account. On the day, we are up $53. Over the last week, we are down slightly, $28. Over the last month, and we know how the market's been going. Only been kind of flat over the last month in this account, up $13. 3 months, we're up 5%, $389. Year to date so far, we're down 1%. Over the last year, I think we're down. Remember, I was saying I traded options in this account, so not surprisingly, but overall in this account we're up 51%. So hopefully we can try to get this up to 55, 60% over the next month or two. We were up there for a minute, but with the market kind of pulling back a little bit, brought us back down, but we're going to get it. We'll get it back up. We'll get it back up. So let's just take a look at how we did with the stocks today. ET, we're sitting at 81 shares on the dot now. Let's see. We were up today. Kind of flat. 17 cents. Overall, we're still up 43% on ET. Oh, today's return $14.57. Not bad. What we got coming up? We got the dividend pending. This is what I like about Robinhood. So we got $26.24 pending. And that should hit the account on the 19th of February. And that's coming from 80. We have 81 shares now. So to have 81 shares, $26 and dividend payment, I think that's pretty good. And it keeps going up. So we're going to reinvest that. We have our reoccurring investments of $5. That's every other week. We just had a payment on the 12th, right? So our next bi-weekly payment buys on the 26th. So just keeping that flowing. ET's looking pretty good for me. Not mad at it at all. What else we got here? We'll look at VTI. How did we do on our VTI position today? I gotta catch up with Lisa and her VTI. I'm down here. I only got 4.6 shares, but I'll take it. You see our average cost 252 and VTI is trading at 302. So we're up overall 19%, almost 20%. Today's return, we are up $16.56 on VTI. We got some recurring investments, $10. That should take place on the 20th. So that means it's a weekly buy. That means we just bought $10 today, today is the 13th. So VTI is doing what it's supposed to do. If you're starting a portfolio, you need that starter pack. VTI VOO is a good place to start. And then you can kind of just start building from there. Let's see, QQQM. Today we were up. The market was up. The NASDAQ was up. So we were up 1% today on our QQQM position. We are up 25% overall. And we're sitting at 4.24 shares. Reoccurring investment, we do a weekly buy of $5 in this particular position. And the next payment is on the 18th. And last but not least, we're just touching on the stocks tonight. I'm not going to go into the crypto. Maine. I got to get my Maine up. I need to do some side investing in Maine just to keep building this position. But you see on today, it was flat, up $1. Overall, up 41%. We have a pending dividend for tomorrow, $4.55. So I know Lisa has some Maine, so I know she can be expecting a dividend payment pretty soon. And we have our bi-weekly buy of $5 in the Maine with our next payment on the 18th. So overall, Robinhood's looking pretty good. Our next goal is to get back to 7,500. And then once we hit 7,500, we're going to try to, we're going to make that push to 8K. So hopefully the market does what it needs to do. You never know, honestly, day by day, but we're going to keep the faith, and keep pushing. And just reinvest in the dividend, keep the position green. It just depends. It depends on what the price of the position is once it's reinvested. So I have some stocks that I'm in the red in, and I get paid once I get that dividend. And I mean, if the price is still down, then we're gonna stay in the red, But I don't mind, when a dividend gets reinvested at a lower price. I don't mind, especially if it's something that I think is gonna go up over time. Then I just got to be patient. Keep stacking, keep letting that dividend reinvest. Then over time, if we expect that price to go up, it'll all pay out in the long run. So I don't get too worried about it. I have the long-term investor's mentality. So, it all depends on the position. It just reinvests back in at the price, at that time. So it could be green, or it can be red if it depends on what the price is. Yep. Mm-hmm. Anything else? I think that's all I have. We're at the 40-minute mark. If you guys haven't hit the like button, please do that. Hit the share button. Subscribe if you're not subscribed. I think we're gonna We're gonna shut it down. This is episode 3 of the late night stock talk. We're gonna try to come in every Tuesday night, every Thursday night, 10:30 Eastern Standard Time, and then just have a little discussion, man, a little stock discussion. You guys can bring some stocks, some ETFs that we can look at, and we'll look over them. Any questions, any recommendations, I'm open to all of it. So it's just a community to come in and just discuss the stock market. So, but yeah, I think that's where we're going to end it out for tonight. Lisa, I appreciate you joining in as usual. Neil, I appreciate you joining in. Great conversation, great questions. I appreciate you guys supporting. And but we'll shut it down for the night. And I will talk to you guys later. Remember to like, share, subscribe, hit that notification bell. I really appreciate it. And I will see you guys on Tuesday nights. Yes, Lisa, let's get the 1K. Hey, let's get the 1K. It's going to be a process, but we'll get there. We'll get there. But I'll talk to you guys later.